As we already know, the market has been down for quite a while now, and this alone has given a lot of investors more reasons to think and reschedule their trading plans. Have you checked your plan lately? Well, you will notice that big indices like the S&P 500 and the Russell 1000 just hit 52-week lows. We're currently in what experts call the bear market, which means stocks have fallen 20% from a recent high. What this means is that your stocks are probably worth a lot less than they were a year ago. This is why you need to know how to perfectly handle your investments and how to find great stocks. Are there any chances of gaining back what you might have probably lost during the bear market? The answer is yes. It is certain that you can still find great stocks to invest in. But the big question is, how do you actually find these great stocks to invest in? Well, that's what we're going to be discussing in this video. We'll be sharing with you a surprisingly simple screening way that has been inspired by great investors such as Warren Buffett and Charlie Munger. A lot of investors are closely watching Berkshire's public stock portfolio, and if you're also an investor looking to build lasting wealth in the stock market, then we advise you to do the same. Investing alongside great investors can be a very great strategy if you're seeking outsized returns. Warren Buffett has been a mentor to other great investors. This is why many individuals always come to listen to Buffett's words of wisdom regarding wealth creation, stock purchases, more on the economy, and how to find great stocks for the coming year. Welcome again. In this video, we're going to be talking about Warren Buffett's strategy on finding great stocks for 2023. So watch this video to the end because it's going to get interesting. Also, remember to subscribe to our channel and click on that notification icon so you can stay updated with our videos. Without wasting any more time, let's get started. All right, guys, according to Warren Buffett, there are 6 steps to this process. Step 1, define your circle of competence. You shouldn't miss this step at all. When markets swoon and stock prices drop across the board, some traders often go with this move. This is where you'll hear phrases like buy the dip, buy the dip. Well, you should remember that picking the right stock to buy isn't easy. That's why it is also essential to keep an eye not just on price, but also on the value of the stocks. From a general perspective, most investors go for stocks that are priced lower in the stock market. But you should also remember that cheaper stocks tend to have more risk than high-priced stocks. This is why you should clearly define your circle of competence. But how can you achieve that? Okay, you should make a list of all the things you are really good at, all the things you spend time on, and all the things you spend money on. When that has been achieved, you can now get out the Venn diagram. So the topics that appear in multiple sections are probably in your circle of competence. Once this is done, you now search for those common themes in your Venn diagram, and then from there, you can literally Google search the particular stocks in that theme. Although it's not a shopping list, it is just your starting point. With this in mind, it means that there are chances for you if you spend money on it since you already know about that stock. This strategy will let you know your time on it, and if you're naturally good at it, then you'll already have a perfect idea of the kind of business you're dwelling in. Step 2. So this step is very important. You need to take a look at the companies you're looking to invest in, and then have a look at whether the super investors own these stocks. So it's best to look for the company you're interested in and then see if any super investors are on the list of major shareholders. There is no crime in browsing the portfolios of some super investors to achieve this aim. You can also Google what these top investors and other investors have said about the company in the past. This will make you begin to get an understanding of the investment thesis and what the value actually is. Step 3, check through the company's annual report. All right, this is a very crucial step to finding great stocks. This is otherwise known as a 10K. A 10K is a comprehensive report filed annually by public companies about their financial performance and progress. The report is required by the U.S. Securities and Exchange Commission and is far more detailed. In this report, the management will perfectly describe what the business is, what they do, and how they generate their income. If you take a few minutes to read that section, you'll easily get a sense of whether or not this is something you're interested in. Step 4. Read the annual shareholder letters. Yes, this is also a very important step you should take. Always try as much as you can to read the annual shareholders' letters. Why you should do this is because it does tell you a lot about the management's execution and how they run their company. It also shows you how they treat their shareholders. You know you can always say a lot about a CEO from the contents of the shareholders' letter. You can simply go back a few years to read what they promised to do and then cross-check their promise with how well they actually did. Are they honest? Do they talk about the challenges as well as the successes? Do they underpromise or overdeliver? These are the kinds of questions you will get answers to when you read this letter. So with this, you will know whether or not they are trustworthy enough to buy their stocks. Step 5. Know the earnings calls. As reading the shareholder letters is important, so is understanding the earnings calls of these companies. The earnings calls give us a really good sense of what the management is like. This is why it is essential to listen to the earnings calls, and it is really an important habit you should cultivate. This is because it helps you judge the two main features of company management, which is skill and integrity. If they have these main features, then in the earning calls they won't overpromise, but they will surely deliver. Step 6. Check out the proxies. This is the final step you need to know in order to find great stocks for the coming year. This can also be referred to as the Def 14A filing. What does this even mean? Okay, Def 14A, also known as a definitive proxy statement, is a required filing when a shareholder vote is required. This filing outlines the list of items up for a vote by shareholders, such as the hiring of new directors or other business decisions. This particular document does actually explain how the management team is always compensated. It also explains what they have to do to earn their bonuses and how much stock they own or get given. This is most commonly used with an annual meeting proxy and filed in advance of a company's annual meeting. The major reason you need to consider this step is that you want the management's incentives to align with the long-term shareholders. You will also need great and modest salaries and incentives related to the long-term success of the business and that of its shareholders. Also, we want the CEO to have a very good and viable stake in the business for their wealth to be directly tied to how well they can improve the company. This is a very crucial step in finding great stocks for the coming year. And that's it for today, guys. If you enjoyed the video, do ensure to give this video a thumbs up, tap on that awesome subscribe button, and jingle that notification bell so you'll stay updated with our interesting videos. Thanks for watching, and we'll see you in the next one.